So I'm going to talk about keeping the money that Susie helped you make. My name is Wendy Barlin, and I am a CPA based in Los Angeles. I'm originally from South Africa. That's where the accent is from. And I know you'll find this shocking, but I did not grow up wanting to be an accountant. I wanted to be a princess, actually Cinderella. But around 12 years old, I realized two things. The Prince Charming, he doesn't really exist, and the chances are he's not coming. And the second thing, my dad, also not Prince Charming, he came from the wrong side of the tracks, worked very hard, self-made millionaire. He would leave the house at 6 in the morning, come back at 6:30, and God help you if his tea wasn't stirred right, or if a cup was over here instead of over there, he would yell. I mean, really yell, not just like, really yell. House-shaking yell that my sister and I would hide under the beds. And at 12, I said to my mom, can we just leave? Why do you put up with this? He would call her stupid. He would actually say to her, you are stupid. And I said, can we just leave? Why do we put up with this? And she said to me, we have nowhere to go. I have no way to support you. We have no choice. And that's when I decided I will have a choice. My children will have a choice. And so I pursued accounting. And that has allowed me choices. And when I have an opportunity, even on April 7th, to come and speak to a group of women to teach you about how to have choices always, I always take it. So don't worry that it's April. I'm good. I'm here, and we're talking about choices today. So most importantly to understand is that planning is very important for taxes. So those of you who go and see your accountant in March, there's nothing that person can do for you. They're not a magician. There is nothing they can do for you in March. Taxes are cash-based. Does anybody know what that means? Okay, so it means that taxes are based on money coming into your bank account and money leaving your bank account all year long, and whatever it is at December 31st, it is. So that leaves us to understand that that last quarter of the year is critical. December is my busiest month. Every single client must do tax planning with me in the last quarter of the year. That's when we decide how much tax you're going to owe. We hold deposits, we bring expenses forward, we play all kinds of games. Very important. If there's nothing else you take away from today, please don't wait until March, cross your fingers and hope that everything's going to be okay. I've never found that to be helpful. Okay. Does anyone in the room do their own taxes? Bravo. I am okay with that. I know that surprises you. That's why no one raised their hands. But I'm actually okay with you doing your own taxes. Here's why. The softwares like Tax Pro and Tax Cut are exceptional. Those companies spend millions of dollars perfecting that software. So if you're going to do it by yourself, do one of those softwares, follow the system, answer the questions, do not try and override the system. The only time that I don't recommend it for you is if you want to be a little more aggressive. Those systems do not allow you to have the conversation of, is this smart? Is this really deductible? Could it maybe be deductible? Those systems are for people who are risk averse and just want to get their taxes filed on time and correctly. If you want to play in the gray area, then you need an accountant who's willing to do that with you. I'm not talking about anything illegal, ever. My mom also told me I was too fat and couldn't wear stripes, so I'm not going to jail, even with you guys. So nothing illegal ever, but gray area, okay? And we're going to talk about some gray area today. So it's okay to do your taxes by yourself if you are risk averse and use a solid system like a Tax Cut or a Tax Pro. Then let's assume you're going out into the world to search for someone to help you. Does anybody work with a tax preparer who says, don't worry about it, I got it, sign here? Just sign here, yes. Never again, stop. Okay, so in the world we live in today, we are all smart people. And we have, as accountants, a fiduciary responsibility to explain to you what you are filing. Not the calculations, because even I don't understand them, to be honest. The computer does that part. But this is how much money I made, and this is how much tax I am paying. Why are they not the same? That doesn't make sense. So before you sign anything, you say, please explain to me why I made $300,000, but my tax return shows I made $400,000. Where's my money? Very important. If your tax preparer will not take the time to explain that to you, you need to move on. Saying I'm too busy, that is an absolute, makes the hair on the back of my neck stand up. Our responsibility is to serve our clients. And by doing that, we need to have the time to sit with everybody and explain your taxes to you. Move on. If they're saying sign here, besides that if, God forbid, you get audited, the auditors love that when you say, well, my accountant said it was okay. Yeah, that doesn't fly. You're in stripes. I'm kidding. There's no tax jail. Not for us. Only for Beyonce. There's no tax jail. Okay, so we're talking about everybody's going to do some planning before the end of the year. Now let's talk about receipts. Ooh, isn't this exciting? Okay, when you checked out of your hotel today, did you get a folio from the front desk? I hope you did. Otherwise, you got to go back to the hotel and go get it. A credit card charge is not a deduction. A charge on your credit card is not a deduction. You have to have a receipt. It doesn't have to be a piece of paper. It can be a JPEG or a PDF or whatever computer system you have. Take a photo with your phone. You have got to have a receipt. Except, there's always an except in the IRS, right? Except if it's under $25. Anything under $25 you do not need a receipt for, but anything over you do, and you need to keep it for 7 years. It doesn't have to be in a beautiful A through Z portfolio. If you get audited, you take them a box of stuff and say, good luck, I hope you can find it. But you must have your receipts, okay? The other piece about audits is I don't want you to live in fear. The IRS has no people. Have you ever tried to call over there? There is no one there. They send letters, but the audit rates are extremely low. The highest audit chance is for those of you filing unincorporated Schedule Cs on your tax return. If you happen to have a Schedule C on your tax return for an unincorporated business, you are the highest tax category for audit. And I know that seems weird, like why would they come after us? Go after big business. Well, that's because they know Schedule Cs are easy to set up, easy to audit, easy to find extra money, especially if you live in a high income zip code. So if you live in Montecito, whatever their zip code is, and your Schedule C shows profit of $10,000, you are very likely to get a letter saying, excuse me, your neighbors declare $300,000. Why do you only have 10? And I've actually received one of those letters, so it happens. So in that case, I would probably be a little more conservative on your deductions. If you wanted to be more aggressive on your deductions, you would want to be an S corporation. That is still the most tax efficient and tax effective vehicle, especially for those of us in the consulting world. And I think it's really important to have that discussion with your accountant. Again, don't just go to Google and pick one. Don't let your lawyer pick one for you. Have that discussion with your accountant. If I create a corporation, how much will I save? And if anybody is going through this decision now for themselves, shoot me an email and I have an awesome worksheet I can send you that will help you with the different choices and what they mean for you, because I probably get that discussion every day. Okay, planning, receipts, now we're gonna go hardcore. Everybody ready to go hardcore? We're gonna talk about tax law. We're gonna talk about law, okay. So the law says, anything is deductible that is reasonable and necessary for your business. That's what the law says. Isn't that scary? Reasonable and necessary. I went to school for a lot of years to learn that. Reasonable and necessary, write that down. That will stand you in good stead. If ever you are in a store with your credit card going, is this a business expense? Is it reasonable and necessary? Now there are a couple of no's, of course. No gym, no country club, no clothes. No gym, no country clubs, no clothes.
Even if that's where your people are.
No gym, no country club, no clothes. I don't look good in stripes. So, well, that's what my mom said anyway. So Reasonable and necessary, and here's how far it can go, depending on how creative you want to be. I have a client who has a Shih Tzu. It's this fancy little expensive white dog, and she wanted to deduct all her pet care expenses. So she took her dog's picture and put it on her business card as her logo and on her website. And she actually got audited, not because of that, she got audited because of something else, and she flew through that audit. Because keeping her dog beautiful, well-fed, well taken care of was reasonable and necessary for her business. So I want you all to go home and think about reasonable and necessary, okay? So you all learned tax law today, and you thought this was going to be hard. Reasonable and necessary. Okay, there's one other hardcore tax piece I want to talk about today. One more hardcore piece. Do I have everybody? One more hardcore piece. The home office deduction. Okay, I hear everybody groan. Ladies, home office deduction, yes? Yes? Hardcore. 25 years ago when I came to this country, a little man with an IRS badge would show up and say, "Show me your office." Is that a bed? Okay, there are no people there. They're not coming to your home. In fact, there are 4 million home office filers in this country today. 4 million. I will, however, tell you the law says it must be your primary office. Okay? So what does primary mean? It means where you do the majority of your work. So first of all, I don't want you to be scared to take this deduction. Take it. If your accountant is telling you it's an audit risk, they need to come into the 20th century. We haven't seen audits on home office in 20 years. That being said, I don't ever want to run afoul of the law. And so what I will tell you is primary office. And what that means is you cannot have another office. So an example of that is my therapists. I work with a lot of therapists. They have offices where they meet with patients, clients. There is no desk, there's no computer, there's no filing system. They may take a home office. A lawyer who sees clients at the office and then chooses to come home and do billing or work at home on a Friday, not deductible. Does everybody understand how there's a difference? Primary office. So you need to be able to show that you primarily work from home. It's not about your couch or your chair or your dog mat lying in the corner. It's about primary work from home. And the other way that sometimes people get into trouble with that is these new WeWork co-working spaces. You have to be a little careful with that. If you have one where it's just a mail drop, then you can absolutely take your home office. But if you have one with your name on it and a room with a door, it's a no. And again, this is an easy thing for them to trace. So this is why I like to be very clear. Because when your profit and loss or your tax return has rent expense, and then they go to your personal return and see home office, right? Reasonable and necessary. I see rent expense in 2 places. So again, if you truly have a home office, please take it. Don't let your accountant tell you it's a trigger for an audit. That is nonsense. Hasn't been the case in 20 years.
Would a mailbox be rent expense?
Usually it's rent expense, but it is not precluding you taking a home office. And so the other piece that a home office opens up is commuting and car expenses. So I get this question a lot. If you drive from home to an office, that's called commuting. Too bad, so sad, not deductible. Period, not deductible. If you drive from your office out, you drive here, you go to a meeting, you go to Staples, that's deductible, but that's small. So if you have a home office, imagine this. Every time you leave your house, it's deductible. The law even goes as far as to say that if I am going to pick my kids up from school, but I happen to stop at the post office, no, I would never go there. I happen to stop at Staples to pick up some supplies, that entire trip now became deductible because I came back to my office, happens to be my home. So you can see how the home office is extremely powerful. It opens up not only the deductibility of your home office, but also your mileage. Very powerful. Yes?
So I have a Mary Kay business that I run out of, I have a desk in my bedroom that I use as a home office and whatnot. But one of my tax questions every year is how much of your house is your business? How do you
Right.
that?
So my answer to you is always, please speak to your CPA, they're signing the return with you.
Yeah.
But generally, I will tell my clients never to go above 30%. Again, reasonable and necessary. So I don't ever want to get a letter saying, gee, that seems high. That doesn't seem reasonable. We all want to go with reasonable, and we all want to go with ratios as a percentage of your revenue. And so that's where working with someone who's looking at the numbers saying, this number looks a little high. Even though that is a real deduction, let's not take it because we're opening a can of worms. Okay, really important. So home office, go ahead and take it. Commuting versus auto expenses, really important. We talked about receipts. We talked about choosing your entity type. And the last thing I want to cover before I leave you today is the importance of bookkeeping. And I hear another groan. I know everybody hates it, and you don't have to use QuickBooks. There are lots of different systems out there. But please, please, I beg of you, do not build your empire on straw. It's building your empire on straw. You need brick. Brick for when you want to sell. You want a credit line at the bank. You have an audit. You have got to have a house of bricks. And bricks is bookkeeping. I know it's not sexy. I know it's not fun. I know it's not cool. I know it's expensive. It's important. And I'll leave you with this one quick story. I had a client, 3 young women, who bought a flip and flop kind of thing. You know, they wanted to be that. And they came to me with an Excel spreadsheet of their income and expenses. And just knowing the market, it didn't look right. They were saying they had $44,000 in taxable profit. Oh dear. And I said to them, I'll do you a favor. I'll take this Excel spreadsheet and I'll put it into QuickBooks. If you owe no money, you pay me for the work I did. If I come up with the same numbers you come up with, you don't have to pay me. Guess what? They owed nothing. There was an error in one of their Excel formulas. Do you want to pay more tax than you need to because you had an error in an Excel formula? Come on, it's worth the bookkeeping. Every dollar you spend on bookkeeping, more than comes back to you in taxes. And I actually personally guarantee that. I personally guarantee that when people come into my office and say to me, I don't want to do bookkeeping, I tell them, I will pay for your bookkeeping if it doesn't save you money. I am that certain in doing this for 25 years that it will save you money. So when everybody leaves here today, 2 things. Make sure you set up your bookkeeping system, please. And manage it all year long. Don't wait till March. Make sure you sit down with your accountant and understand what is on that return that you are filing. And make sure that in the last quarter of the year, you are doing tax planning. Because once the government takes your money, they're going to squander it. And my job is to help you keep more and choices, right? If you want to have choices for your life and your kids and your family, you got to hang on to this money that we are working so hard to earn. Thank you. And I'm going to leave you with, if anybody has any questions, feel free to email me. I have office hours because I love to teach. I have office hours once a week. And if anybody would like to hop into my office hours with any questions, I'm more than happy to offer that to you. Thank you. You're welcome. I love taxes.
I'm glad that you love taxes. We all need you in our life.